everybody and welcome. In this video I would like to go over moving averages, specifically the exponential moving average. These exponential moving averages are one of my favorite indicators to use that could be combined with other indicators as well to time our entries or exits. So what the moving average does is an indicator that helps smooth out the price action. The exponential moving average is known as a lagging indicator because it is based on past prices, so it's not the best indicator to use by itself, but when you combine it with a lot of other indicators, it's very powerful. So what the exponential moving average does is that it takes the average price of a coin or index or stock, etc. over a number of periods, and it helps identify the overall trend direction depending on the time frame. And it also determines the support and resistances as well. When we combine it with other indicators, we find something called confluence. And when we find confluence in other indicators, it can definitely help identify entries or exits. So what I use are the 8, 13, 21 and 55 moving averages. In technical analysis, there is no such thing as a sure bet. The nature of trading is that the possibility of profit comes hand in hand with the possibility of risk. With this uncertainty in mind, the successful application of technical analysis depends on entering the market at the moment where there are as many indicators of an advantageous outcome as possible. This is the concept of confluence, the idea that the best market movers are those that are supported by multiple converging factors or indicators that all testify to the advantageous conditions of the trade. These numbers are sequential numbers of Fibonacci, and Fibonacci is a very powerful sequence of numbers that it is used in trading, and it's found everywhere in the universe as well. On these moving averages, it is important to understand that it is a lagging indicator, and these lagging indicators, it trails the price action and it generates signals to confirm the strength, and it usually confirms a longer strength over a period of time. The EMA is known as a lagging indicator also because it occurs after a certain price move has already happened. So you notice that I have drawn something on the chart, and I want to explain what these drawings mean. This one on the left denotes a bullish uptrend where the 55 moving average right here on yellow is below all other moving averages, and if the candles are hovering above all of these moving averages, that means that all of these moving averages are acting as a support for the candles and price. This one on the right denotes a bearish downtrend because now the 55 moving averages is on the top of all other moving averages, and for this example, if the candles are hovering below all of these moving averages, that means that they will act as a resistance for the candles and price as well. Now, I want to take you through many examples of how you can determine your entries or exits only based on moving averages and candlestick formations. In this first example, what we see right here is that I am on 1 hour time frame, and we see a crossover to the upside on the 55 moving average right here, and that is a very good signal to enter a buy position. First of all, before you enter a buy position based on moving averages, you must consider this criteria. The first criteria is to have a candle successfully closed above the 55 moving average, then the second candle to have more volume than the previous one, and also to close above the 55 moving average. The second criteria is to see at least some wicks poking to the downside, and that means that the bulls managed to defend against the bears. And the last criteria is to have a lot of volume to sustain this uptrend and be above all of these moving averages. With these three very important criteria in mind, we will make our best decisions in the future when it comes to enter a trade based only on moving averages and candlestick formations, but we have much more to learn in this course. In this example, we can clearly see that we started a strong uptrend from this point over here where we entered the buy position, and when you see this kind of price action like here, you can see that this moving average starts to fan out away of the 55 moving average, and that is a very strong, good signal, because that indicates that we are on a strong uptrend. And also what tells us that we are on a strong uptrend, first of all, are these candles and the 8 and 13 moving average, because all of these candles are hovering above all of these moving averages, and the 8 and 13 moving average are sustaining these candles, acting as a support, and that means that the bulls are defending against the bears. Right here, as you can see, the candles went below the 55 moving average, but you don't want to sell right here. You want to sell when these 3 moving averages are crossing the 55 moving average to the downside and respecting that 3 criteria that we've talked earlier, okay? So we keep riding it, guys, because there is no crossover to the downside yet. So we keep riding it to this point over here, where now the 55 moving average is above all other moving averages, and as you can see, all of these moving averages are now acting as a resistance for all of these candles right here, and finally a sell-off starts. So in this trade, just respecting a few rules, you would have made 17% of your position right there. So if you have played a $10,000 position right there, you would have made $1,700 in just 2 or 3 days by just following this very simple strategy. In the next example, I will show you another bullish uptrend crossover of the 55 moving average, and now I am on Neo chart and I am using the 2-hour time frame for this particular example. As you can see right here, we have a bullish crossover of the 55 moving average, but first we only want to take this area into consideration only because we want to have more volume, and we will wait for it to pick up to sustain this potential uptrend right here. After we see that the volume is picking up, then we want to consider entering a buy position based on this moving average strategy. So let's analyze these candles right here and understand what they are telling us. For the first candle right here, we see that the price is trading below the 55 moving average, and when the bulls try to push the price up, they got rejected from the bears, and that's why we see this wick poking through the 55 moving average. For the second candle, we see another attempt from the bulls, but this one successfully closed above the 55 moving average, but we don't want to enter right now because it doesn't fit our criteria of having enough volume and all other moving averages to cross over to the upside of the 55 moving average. Note that a very aggressive and very experienced trader would have entered as soon as this candle closed. For the next candle, we see that the bears tried to push down the price, but they got rejected by the 55 moving average, and the end result of this attempt is a dragonfly doji candle. For the next candle, we see some indecision in the market and there's less volume than the previous one, so we stay away from entering a position for now. After that doji indecision candle, we see another attempt by the bears to push down the price, but at the downside of this candle, we see a long wick poking through all moving averages, and that implies that the bulls defended against the bears, and the candle closed above all moving averages. In the next candle, we see that we have a rejection from the downside as well, this time making a higher low than the previous candle, and we start to see that the 8 and 13 moving averages starts to cross to the upside the 55 moving average, but we don't enter a position yet because we want all of the moving averages to cross the 55 moving average to the upside with a lot of volume, which we don't have at this moment. What we understand from the next candle is that the bears are making another attempt to push the price down, but they fail again and the candle closed above all other moving averages and creating a higher low than the previous candles. On the next candle, as soon as the price went above all other candles highs, we want to enter a buy position because the 8, 13 and 21 moving averages now crossed over the 55 moving average to the upside, the volume starts to pick up as well, and that implies that the bears failed to move the price to the downside, and we start to uptrend from this particular region right here. So from this point we start to ride it, guys, and we don't want to sell this coin until another crossover happens to the downside of the 55 moving average. You can see it right here that the 55 moving average is acting as a support for these particular regions, but don't panic, we will follow our rules to sell only when the 8, 13 and 21 moving averages are crossing the 55 moving average to the downside. So we keep riding it to this region right here where we see a crossover to the downside. Of course, you could have sold it right up here, but you don't know any other strategies yet. So we follow our rules and we sell right here where the 8, 13 and 21 moving averages are crossing the 55 moving average to the downside, and we want to sell it right here at this candle because here is the spot where the moving averages actually crossed over. So just following this very simple strategy, you would have made a huge 55% gain, and that is awesome. In the next example, I am using the Litecoin chart and I am on the 4-hour time frame. Here as well, I want to present you another example of a bullish crossover of the 55 moving average and how easy it is to follow this simple strategy and make huge gains. In this particular region over here, we see that there are a lot of attempts from the bulls to move the price up, but they fail because there is not enough volume to sustain an uptrend yet. But we are getting closer and closer to a crossover. You have to remember that patience is the golden key of a trader. If you want to be successful in this domain, you have to be very patient. If you are not a very patient person, you have to exercise it because it will help you a lot in the long run. You should never enter a trade in a rush because it may go against you and you may be frustrated because of this. Just follow your rules and you will be very successful over time, and that I guarantee you. With that words of wisdom in mind, let's move over to this highlighted region over here where we finally see a crossover and we want to enter a buy position for this coin. For this green candle over here, we see that the bulls are attempting to push the price up and they successfully managed to close this candle above all of the moving averages. And for the next candle, we see that a hammer is forming here because the bears tried to push the price down, but they got rejected from all of the moving averages, and that is a very strong candle that could give you an indication of what is to come, but it is very important to wait for confirmation before you enter a position. On the next candle, we can see that the bulls are in control. The volume starts to increase as well, and now the 8, 13 and 21 moving averages are crossing over to the upside, the 55 moving average, and now it is a good time to enter a buy position. Now we are in a buy position because we see a crossover to the upside of the 55 moving average. We will stick to our rules and we will sell only when the 8, 13 and 21 moving averages are crossing down the 55 moving average. So we start riding it, and in very short time we can see that the candles went below the 55 moving average, but we have strong hands and we follow our rules and we are not panic selling because we don't see any crossover to the downside yet, and we keep riding it. Here again we see that the candles went below the 55 moving average, but we don't want to sell. Why? Because we don't see any crossover to the downside yet, so we keep riding it to this region right here where we finally see a crossover to the downside, where now the 55 moving average is above the 8, 13 and 21 moving averages, and these three candles over here are giving us a strong indication that the bulls tried to push the price up, but they got rejected by the 55 moving average, and that is a signal to take profit. So how much profit do you think you have made in this trade? 400%, guys, in just 46 days. Let's say you would have played a $5,000 position in this trade. You would have made a profit of $15,000 in just 1 month and a half. and that is insane. That's the reason why I like to trade coins, because I love this type of volatility. In the next example, I am using Ripple chart and I am on 4-hour time frame, and I will show you when to enter a sell position based on moving averages and candlestick formations. In this example, we can see that we start to downtrend from this high right here, and at this highlighted area right here we can see that the 8, 13 and 21 moving averages are crossing the 55 moving average to the downside, and that is a strong indication of a change of trend, and we want to enter a sell position right here. As you can see in this region, the 8 moving average starts to act as a resistance for all of these candles right here. So we will wait until all other moving averages starts to cross the 55 moving average to the downside, and then we will enter a sell position, and we want to do it right here, because this is the region where the 8, 13 and 21 moving averages are actually crossing down the 55 moving average. So we sell our Ripple coins right here because we see a crossover to the downside of the 55 moving average, and we will follow our rules and we will buy this coin again when we see a crossover to the upside of the 55 moving average. Right here you can see that the bulls are attempting to push the price up, but they got rejected by the 55 moving average, and we will continue to downtrend even further. If we look further on the chart, we can see that we have another 2 failed attempts by the bulls to move the price up, but again they got rejected by the 55 moving average, and the downtrend continues even more, and we stay in this trade with strong hands waiting for a crossover to the upside to enter a buy position. So after 30 days we finally see a crossover to the upside of the 55 moving average, and that is a signal to enter a buy position right here in this region, because it fits our criteria to enter a position, and in this trade you would have made a 55% gain in just 30 days by just following this very simple strategy. In this example I am using Ethereum chart and I am on the 4-hour time frame, and we are going to analyze another sell example. In this highlighted region right here we can see a crossover to the downside of the 55 moving average, and it fits our criteria of entering a sell position because this candle successfully closed below the 55 moving average, and we have plenty of sell volume as you can see right here. As well as in the previous example, we can see that the 8 moving average is acting as a resistance for these candles right here, and that implies that the bulls didn't have a chance against the bears, and we start to downtrend even more. So we enter a sell position right here on this candle because this is where the 8, 13 and 21 moving averages are crossing the 55 moving average to the downside, and we will buy this coin again where we see a crossover to the upside of the 55 moving average. In short term, after we entered this trade, we can see that the bulls are attempting to push the price up above the 55 moving average, but they don't have enough strength to sustain this momentum, and we ended trading below the 55 moving average. In this area, it's very important to consider this cluster of resistances right here, and I'm going to highlight it like this so you can see what I'm talking about, because you can get trapped because it is a bull trap that makes you believe that we are on an uptrend, but we are not. How you can spot this that this is a bull trap? It is very simple. First of all, we don't have any volume at all, and second thing, on this candle right here we want to see a wick to the upside. That implies that the bears are defending, but they didn't even try. And immediately after this candle closed, the market reacted, and we can see these 2 red candles right here. Another reason why we don't want to enter in this particular region is because the 55 moving average is still above all of other moving averages. Okay, so with that in mind, we continue to downtrend even further, and what you can see in this downtrend is that we can't even test again the 55 moving average because we face an immense sell pressure from the bears, and we stay below the 8 moving average for the most of the time. So after 48 days being in this downtrend, we see a crossover to the upside of the 55 moving average that fits our criteria to enter a buy position, and in this trade, just by following our rules, you would have made a 55% gain. In my final example, I am using Bitcoin chart and I am on 6-hour time frame, and we are going to analyze another sell opportunity using the exponential moving averages. As you can see right here in this highlighted area, a crossover to the downside happens that fits our criteria of entering a sell position because the candles went below the 55 moving average, and we have plenty of sell volume on this candle right here, where we will enter a sell position because here as well all other moving averages are crossing the 55 moving average to the downside. So now we are on a sell position and we want to buy Bitcoin again, where a crossover to the upside of the 55 moving average happens. What we can see here are many attempts to break this 55 moving average, but we don't have any volume at all to break this resistance, even though here we have 3 candles closed above the 55 moving average, but we don't have any volume to sustain up here, so we downtrend even more. And after 35 days being in this trade, we see a crossover because we had a huge volume spike right here, and these 2 candles right here are forming a tweezer bottom, and that could mark a potential trend reversal. So in this region right here, you want to enter a buy position because it fits our criteria, and you want to enter right here where they actually crossed over, and because of that we see this very bullish candle with more volume than the previous candles. And in this trade, you would have made in 35 days a 35% gain by just following this simple strategy using exponential moving averages and candlestick analysis. So thank you guys for being here with me during this lecture, and I will see you in the next one.